Ladies and gentlemen of the crypto space, we're live on a Wednesday, May 11th at 11:39 a.m. And yes, obviously, I have my upbeat tone. It's an absolute requirement because I'm an upbeat person. Just because the markets are absolutely shitting the bed doesn't mean there's extraordinary, exciting, and information to be learned and acquired and digested and assimilated and all that fancy shit we always talk about. So, what a wild ride! The market is absolutely frantic. It's filled with the same experiences we had in times past, years past, and decades past of persons that are just getting acquainted with the fact that markets go down. And they go down extremely fast, especially in post 2008 with the amount of intervention that has occurred in the markets. These are not typical bear markets. This isn't, anywhere between the 1900s and 2000. This isn't that stuff that's pronounced that takes weeks and months and years. This is where they juice the market so much that everything collapses. It implodes. It's frail. It's a house of cards, and you take out some of the supports, and literally everything just implodes on itself. And that's aside from the added levels of risk that are created in these crypto markets, these protocols that have untested monetary policy. So, sure, with stocks, you have the traditional notion of cash flow, business balance sheet, solvency, debt obligations, nominal income versus nominal debt obligations. And if a company becomes insolvent, it's going to reflect in the stock price. But in cryptocurrencies, we're dealing with monetary policies, which cannot be entirely looked at as a business with a balance sheet. It has to be understood from a monetary policy perspective. And that's just way beyond the monetary policy of stock issuance. The protocols have robust monetary characteristics, and that's exactly the situation we find ourselves in with something like Luna and the relationship between it and UST. And that's exactly why everything came unwound. You may look to traditional banking systems to see how it became unwound. You could look to more recent history with Titan and how that bank run played out. But this is a classic bank run. Maybe it was encouraged and started in many regards by a malicious actor, but that's besides the point. What's most pertinent for the content that I provide is proper risk management in times like these, times of crisis. This is a time of crisis. The world is at war. There's a global monetary war going on. And really, at the highest of levels, was playing out as a dollar currency war. And that's what the U.S. has done for decades at this point. When it is threatened, when the U.S. is threatened, it exerts dollar strength by raising rates, and that crushes foreign currencies. It reveals every weakness possible in foreign currencies, and everyone rushes to the dollar. And you see that exactly in the DXY between Europe and Japan. And Japan is extraordinarily weak to the point where they're sacrificing their currency in favor of their bond market. Europe will probably be required to follow suit, as the yield curve control is completely contagious. And we'll see what happens with the US market itself. I'm not even showing you the screen. Let's pop it over to the main screen. I was looking at the DXY over here, and this is people buying dollars. You got to remember the title of the stream is purchasing cash. Cash is an investment. Everything's an investment. Dollars are a damn investment. If you have a bank account full of dollars or stable coins, you've chosen that as an investment. It doesn't matter whether you're buying Bitcoin or Ethereum or USDC. It's a chosen investment because you could trade from one to the other. It's a choice of what the balance sheet consists of, your personal balance sheet. So as you can see in this chart, there's periods when the dollar is the opportunistic or the chosen investment, and it significantly rallies compared to other currencies. And as you can see, the dollar is significantly rallying against the broad equity indexes. This is dollar denominated. So if you invert this chart, the dollar is rallying compared to the S&P. It's basically going straight up. This is a very big market crash thus far. Significant double-digit percentage points. So, as I said, yield curve control is contagious, but it coming home to the U.S. would be unprecedented. I mean, we have flirted with the concept of QE over the past 10 years, and that's not really yield curve control. Yield curve control is where they're pegging the shit out of bond yields to a specific yield, no matter how many currency units are required for that peg to be retained. So clearly, we're not there yet, and there's countless reasons why yield curve control isn't needed at all. Maybe there is a risk off of the equity indexes directly into bonds, and then the bond market returns to its normal directionality during times of crisis, which is bonds go basically ballistic vertical. So this is the yield chart on the 10 years. So this here was risk off when the equity indexes were crashing in March of 2020 and bonds were going completely apeshit vertical. So there's that reason equity indexes risk off that would make the 10-year go apeshit vertical. And my interest would probably be more so what would make this type of market correction unique, which would be a margin call in the derivatives markets, which would be completely unprecedented. And and that would be very catastrophic to the point where a significant bailout is required to the tune of not dollars. Derivatives don't need dollars, they need collateral, they need bonds. So I find that to be a tantalizing prospect from a destructive standpoint that a bailout needs to be in bonds, not dollars. They would need to come up with 10, 20, 30, 40, 50 trillion dollars in bonds to prevent hundreds of trillions of dollars worth of derivatives positions from being liquidated upon margin call. And we are in unprecedented territory. We'll see what happens. I'm not too keen on predicting outcomes or speculating on what happens in the markets. I'm more interested in directionality. And thus far, it is going up. 10-year yields are going up. Let's see if there's reason to think that the directionality will shift back downward, which would indicate bonds are being bought. And there's plenty of reasons we have discussed and will continue to discuss why bonds are bought. Um, and we understand that dollars are being bought compared to the equity indexes, and we understand dollars are being bought compared to the crypto markets. So dollars is freaking dollars. Everyone hates dollars. I know we hate dollars, and I know that inflation sucks, but you got to remember you can't fight any of this shit. Either the market is giving you money, and we've had periods like this over and over again. 2016, 2017, end of 2018, it was complete catastrophe in the crypto space. 2019, catastrophe in the crypto space. And then in March of 2020, we had our financial intervention, which resulted in the equity indexes and the entire crypto space giving people money for the taking. And now we're here. At the end of 2021, it cooled down with the inversion of the Eurodollar curves, as Jeff Schneider talks about, and 2022 has been completely down thus far, with a variety of systemic or micro systemic events thus far in the crypto space, and mostly orderly collapse of the stock market thus far. This is orderly collapse. This wasn't an orderly collapse. That was a result of the banking system failure in September of 2019 that nobody talks about to the degree that I think is completely warranted. The fact that the United States banking system completely failed in September 2019 and nobody uses the words that I just used, what an extraordinary perverted system. Um, so my sentiment is cash and dollars are probably the best investment right about now. Everything else is going to be pretty shitty with regard to appreciation, and you'll be lucky if it doesn't depreciate. Sure, there's scavengers and predators that have a capacity to extract capital during times of austerity. They have persons that are very skillful in shorting markets, persons that are skillful at catching dead cat bounces and rebounds, rips to the upside, and they extract capital gains. I, for one, have zero capacity nor interest to expend time doing things as such, engaging with the market as such. And I know the vast majority of persons that listen to me don't either. Either don't have the skill set or don't really want to. And I know for a fact there's capital to be made during periods of prosperity. And that is how I reduce my perspective on how I want to engage with these markets. The most important thing that you could learn, that I've learned, is to treat is to engage with the market as you want to, and don't try and force how you engage with the market. If you're not a good trader, don't frickin' trade. You don't have to trade. You don't have to do the shit that you see a lot of people doing, making money. And it's not a lot. It's a very select minority that outperform in these conditions. For myself, I'm a very passive investor. I know the markets will return to prosperity from this period of austerity. So the reality is, and how I accept the market, there's nothing to do. I'm going to sit here. I'm going to do some work. I'm going to look over some charts. I'm going to do some social media. I'm going to try and put a smile on my face, considering total portfolio valuation, nominal valuation is decreasing. But that's not really how I want to measure the portfolio. I measure the portfolio in two terms nowadays, and I hope it brings comfort to a lot of people that are hurting right now, absolutely hurting. I measure the portfolio in dollar quantity, how many dollars I actually have. Not be it stable coins. Obviously, there's a risk in being exposed to USDC and GUSD, but that's clearly a significantly decreased risk as compared to the likes of UST and, in some regards, Frax. Frax is collateralized very well, and the AMOs are very strong, so I feel much more comfortable with it as compared to clearly what played out with UST and its complete collapse. Um, you know, what did what did Luna do as compared to Frax? Luna inflated the shit out of it. It went for adoption before focusing on how to manage collateral. And toward the end, Do Kwon was working on collateralizing it and finding backing, and that was obviously the failed approach. So, what is the crypto space filled with? Monetary policy experimentation. And that's a failed monetary policy execution. Frax and Sam, on the other hand, went with the AMOs and the collateral management first. So it has not grown as much as UST. It's only a couple bill in circulation, and it's fully collateralized in Treasury. So the AMOs are constantly arbitraging. So that's really what's needed for an optimal stablecoin is completely active market making operations, constantly arbitraging the stablecoin peg, and that's what Frax does, and that's why it's very interesting and unique, and it's always found me great comfort to such a degree that that was one of my larger positions. Obviously, it's depreciated significantly as the fear has spread throughout the market, and I never actually owned Luna, never did, not a single one, nor UST. Never felt comfortable with it. And it turns out that that played out well in the portfolio. I'm very sorry for persons that were exposed to it. I hope you guys listened to me, whether it was my choice to own or not own it. I hope you guys listen with regard to position size and risk management. And if something's going down, you sell it. No bag holders that you don't bag hold. Sunk cost fallacy. Something goes down, you sell it. I sold shit that I absolutely love. There's plenty of positions that I freaking love, and I've sold them a while ago, months ago, some weeks ago, some yesterday. I've lost a couple bucks in the last couple weeks, but not the majority. The majority is protected. I opted for USDC, and now I moved over to GUSD, and whatever. I got the period of austerity. What's the point of the period of austerity? Is to survive. If you survive the austerity, you can get to the prosperity. And if you look at this freaking chart on S&P futures, you're going to have a lot of austerity to go through in order to get back to the prosperity. Hope that helps a bit. I know it's a lot of not satisfying answers. I see folks come on number wise and they come off. They're probably looking for what to buy, and there ain't shit to buy in this market. Stop trying to buy stuff. I mean, I'll tell you when I'm buying stuff, and sure as hell isn't now. Hope you guys stacked up cash because this is going to be a heck of a period of austerity. Grab your BitPay debit card, watch how you manage the capital, and you work your ass off over the last 2 years, and I hope there's a couple of multiples on the cash pile. Believe me, I'm down 75% from all-time high, but I told you guys, and I said it back in probably the end of 2020, the beginning of 2021, I said something like, if you're down 90% from all-time high and you're still up a couple of 1,000% from the bottom, you did something right. God bless if you did something right. because I know, and my heart doesn't feel good. The fact is, the vast majority don't do something right. And that's why I started this stream, to try and help people, at least one person, do something more right than worse. Because I lived through end of 2018, 2019, and I remember earlier cycles, and I remember 2008. And man, just the vast majority just suck at capital management. So I know I appreciate all 42 people on right now, because we could do better, and I know I can do better. And I'm sure as hell gonna keep talking to you guys to help as many people do just a little bit better. Meanwhile, I feel like absolute shit right now. I'm absolutely sick as hell. So let me hit some comments and help you guys out the best I can. Rupert's in the house. Killis. Yeah, Yusuf. Kuwait's in the house. A pleasure. The big twat. My man. Lewis, I got toilet paper. Lewis. Got toilet paper, my man. Perfect demonstration of the importance of position sizing. That's right, Paul. I mean, if you had 5% of your position in Luna, come on, nothing happened to your portfolio. Got hit, but it's not that bad. So please be cautious going forward. And for the love of God's sunk cost fallacy, if some shit's down, you sell it. Cut the loss. I've sold shit at the bottom. It's not about selling at the bottom. There's no dishonor in selling something at the bottom. Frickin' sell it. Get rid of it. This is something else. And I lost a boatload of cash on Solidly, but I sized the position correctly. And I sold it down like 80%. I got out of it. Sell it. Get some cash back. And you gotta. The challenge there is, once you sell it, you gotta get over the emotion. And once you do it once, you'll be able to do it again, and you'll be able to do it again. And sell at the bottom. Maybe just sell at the bottom just to have the experience of selling at the bottom. And you're like, fuck, that sucks. I know it sucks. I've done it many times. But you got to try it to know what it feels like. Mohammed's in the house. Crypto Jake. Good morning, JJ. Hope you're doing well. Horrible right now. Horrible. Personally got wrecked by the UST stuff, but it's just another learning lesson. It is a learning lesson, and please be protective in this market and stop buying shit, everybody. There's nothing to buy in this goddamn market. This market is going to suck capital out of everyone's balance sheet. Keep an eye on the DXY, keep an eye on the 10-year, and obviously you're going to watch the equities markets either roll over or find support on the weekly 100 SMA. And personally, I don't really give a shit what the market does. I'm just going to watch it. I'm going to watch directionality. As long as equity markets are going down, as long as the 10-year isn't doing shit, people are calling this a bond rally. And for me, I'm like, you got to be kidding me. Bonds yields cratered to 0.332% on the 10-year in March of 2020. This is an absolute. This is like saying Luna at $2 went to like $5. This thing has collapsed. Bonds have collapsed to a historic low price point for these yields to be where they are, relative. It's like 80 whatever's. Here, let's do it. Price range. It's like a 90 something percent crash in bond prices. Extraordinary. Or maybe I'm measuring it wrong because I'm measuring yields. Look at that. That's a 900% rise in yields. That's crazy shit. Haven't seen a bond market like this in over hundreds of years. Literally. Johannes, hi Noah, good to see you. Thank you for streaming. Do you prefer VCRV lock for 4 years versus Volog CVX? The core of the portfolio, my portfolio is about half and half right about now. CVX has come down significantly, and Curve is doing well. Look, it was up at $6. I wasn't buying anything up there. My original Curve position was down at 40 cents, but I've added to it since then, and that has depreciated everything. There's not a thing that I have that hasn't depreciated. Ren has literally made the biggest round trip in history. I bought it at 6 cents. I bought it back in March of 2020, and it went to $1.70, and it's back at what, like 20 cents. That's freaking wild. But in hindsight, these are the markets to be in, and I love that shit. I love watching. that insanity. And I love watching stuff like Ren from the sidelines. There's no inflation on it. So I did a round trip. I put in like 18 grand on the three dark nodes, and they went up to really high, and now they're back down. I didn't buy them for the price point to appreciate. I bought the dark nodes. Whatever the dark nodes do, very happy to see what plays out. So don't expect anything if you buy something to appreciate. Expect capital loss. And if it appreciates, great. The odds of stuff that you buy right about now appreciating are basically slim to none. This is not a time to find bottoms, ladies and gentlemen. This is a time to sit on the sidelines and watch the entire system barely avoid complete capitulation if it does. If this system doesn't implode, it's going to be like, holy shit, how the hell did it get through? How did this not happen? How did the system not completely crap itself? That's not a bet I want to take. One curious view. Good morning, Dennis. UST probably best stablecoin. Oh, goodness gracious, my friend. Lewis, if you don't feel like going here, that's fine. Technically, 1.276 billion global market cap was bottom in May 2021 timeframe. I believe we can touch that bounce off. Thoughts, Cap? Uh, I don't know market cap. Market cap will drive you nuts. Trying to trade or trying to find optimal price targets will drive you absolutely nuts. I'm not a trader. I measure the portfolio in two ways. I measure the portfolio, the amount of cash that I have, because my bills on a monthly basis, sure, they're inflating, but they're nominally inflating and they're relatively stable. I measure my portfolio and how much cash I have. Can I pay my bills? How long can I pay my bills for? My car payments aren't going up every month. That's a fixed nominal rate. 30-year mortgage isn't going up every month. That's a fixed nominal rate. So if I have 10 years worth of cash that could pay my mortgage, that could pay my car bill, so that's good. That means I could wake up in the morning and technically I don't have to work because I have enough cash to service my debt. If I could pay my rental real estate tax for 5 years, okay, good. The nominal debt servicing obligations, and that brings you your comfort level. If you have enough cash on hand to service nominal debts, and you can expect your real estate taxes to vary over time. It's going to go up, but it's not going to go 100, 200, 300% over a short period of time. Even the government knows people won't be able to pay that. So that's a problem they have to worry about. Um, but that's where comfort comes from, if you can service your debts. And the goal that I try to teach everyone is how to interact with these markets, not freaking out. Find your comfort zone, and your comfort zone is if worst case scenario is covered. Worst case scenario is covered by nominal debts being able to be serviced by cash on hand. Nominal capital, not relative market price of assets that would need to be sold to raise capital to service the nominal debts. So the other component that I use to measure the portfolio is weekly income. So what is part of my portfolio? My job, I work and I get paid from working, time converted to payment. And that is weekly income. But also assets. Assets that pay you weekly income help refill your cash position to service nominal debts. So here's the max comfort zone. If you have enough cash in the bank to last for 5, 10 years or whatever, you're cushy. And to top it all off, if your income from assets, weekly income from assets plus weekly income from work, if that's greater than your monthly nominal debt obligations, then you really should be relaxing and stop trying to outperform these markets. These markets are not to be outperformed right now. These markets are to be survived. Please. DJ Slith. Hey, no, Sith, my man. Hey, no, I just want to say people like yourself help me gain some perspective on how risky my positions actually were. Help me not lose everything I made last year. God bless, my friend. You make me happy on a day like today. Red Rum. Hey Noah, Terra is holding a big chunk of CVX. It will unlock at the end of June. What do you think about that? How high is the risk in damaging the protocol in case of huge selling? It'll absolutely get crushed. So CVX has a good chance of getting crushed. Now, bear in mind, in this regard, CVX is increasingly liquid as compared to CRV. CRV can't be sold. That has a 4-year cycle. So CVX has a 4-month cycle with regard to vote locking. It's a big risk. That's the appropriate word for it. One curious view feels like gold is being overlooked. I'm considering moving stablecoin position to PAX G. Seems like most rational option given the markets. Well, if there's a big deflationary impulse across all markets, gold's going to get freaking nailed to the wall. So unless there, if inflation rolls over, gold's going to get nailed to the wall. So frankly, I like to think in terms of nominal debt obligations. Cut out extras, cut out. This is austerity, boys and girls. This is not about making money right now. So my channel is about portfolio management, wealth preservation, and managing your day-to-day living expenses. I've talked about pizza shops. I've talked about all this shit over the years. This isn't an investment channel. This is how the fuck you manage your life. There's a lot. We talk a lot of psychology. We talk about emotions, and we talk about risk management. So this is not about investing right now. This is a period of survival. So I wouldn't even buy gold. And this is completely contrarian to Bitcoin maxis. They're like, oh, I measure my portfolio on Bitcoin. I measure my portfolio in a capacity to wake up tomorrow and choose not to go to work if I don't want to. Do I have enough capacity to service my nominal debt obligations if I don't want to work? That's freedom. Now that's freedom. How much Bitcoin you have doesn't mean shit because you can't pay your bills in Bitcoin. You have to sell it for cash, and if the dollar valuation, the market price of Bitcoin is going down, that means you have less capacity to service your nominal debt obligations. That's the bottom line. Crypto Jake, God bless my friend. I hope I helped. One Curious View, Barry, DGB's in the house. Digiverse, what's up? Digi. Love the tech, boys and girls. Pretvid, is Terra Protocol screwed? Yes, it's screwed. Muhammad Isaac, GMX is the last samurai so far. What's the actual bottom is? It's good to buy. Well, structured products are going to be a big deal over the coming years. Everything's going to get sold. Things that will get sold less are the things that pay. We're in a period where we're evaluating what is going to survive. This is akin to late 2018 of the crypto space. Now, clearly, what survived 2018? Literally, only one protocol survived. Syscoin, because they complete and a couple of things are pivoting. So we'll see what StakeNet does. They pivoted. They have their token, and maybe they'll resurrect themselves in the coming years. Bancor survived. Bancor started everything. They started all this, and clearly they're surviving. They got what, $1 billion on their protocol. So Bancor is the biggest winner of 2017 cycle that ended in 2018 and died in end of 2018 and imploded in on itself in 2019. So Bancor is the winner of the last cycle. So yay, Bancor, you won, you get a prize, you get to survive. So today, Bancor V3 launched. I'm very excited. There's literally nothing to do right now, in my opinion. I would wait. I like waiting. I want confluence. I want comfort. I want to be relaxed. I want to have little to no risk. And when $500 million go into Bancor V3, yay, I'll throw my cash in. I'm in no rush whatsoever to do anything because cash is cash and I can service my nominal debt obligations. Emilios, hola, buena tarde. ¿Qué tal? May 11th, 12:08. Otro día. One Curious View, looks like we're hitting double-digit inflation in everywhere. Yeah, maybe. Inflation came down a little bit in the U.S. CPI numbers, but whatever. I don't trust shit. I don't trust any of these. I don't trust. I don't trust the system. I don't trust the banks. I don't trust FDIC insurance. I don't trust anything. And I don't trust IRA. I don't trust custodians. And maybe that's not a good thing. Maybe but that's me. And I respect how I feel. Lives in the house. I'm sick as hell right now. I feel like crap. I'm curious, how do you think Frax will fare? People will try and poke at it. People will try and poke the bear and see what they could do. But it's relatively stable. Frax is stable. The stable coin FXS is getting hammered, just like everything else in the market. And it's obviously getting collateral damage from all the pools and shares with UST. Patrick, my wife, and I are almost completely debt free, thankfully. God bless. Debt is a burden, and it hurts your heart. It hurts your soul because you wake up in the morning and you have an obligation. If you could clear your debt and you could clear any obligation, requirement to extend effort, requirement to do something not for yourself, that's freedom. And maybe that's what this channel is all about. And Captain Rationality. I love rationality. I love psychology. But maybe one of the core things I want to focus on for the upcoming cycles is the pursuit of freedom. And people just completely miss what the hell freedom is. Freedom is literally, if you don't want to work at the job that you're working at, you don't work there. And you have income from other places and you have savings. And you just stop working there. Like, all right, bye, guys. Thank you. I appreciate your time. And you go to another job. And maybe if you have a personality like myself, it's not the job interviewing you. It's you interviewing the damn job, and you could be as picky as you want. And that's freedom, and that's a bit of psychological reprogramming. And obviously, that kind of reprogramming can only occur after proper financial management is achieved. And nominal debt obligations are covered for a period of time with adequate cash savings as well as cash flow. And that's freedom. So maybe I'll talk more about freedom as a psychological goal. Because you always remember, the CEO walked and talked like the CEO before he was a CEO. The free person walked and talked like a free person before he was a free person. And you need to know literally what it is to be free before you could actually get there. So you need to be talking about the shit that I'm talking about of how to manage money, how to manage capital, how to think about capital before you can actually be free. Nominal debt obligations. That's what it's all about. Dan, I used stables to pay back UST debt when things started to go wrong with Luna before they really went wrong. Now wrecked. No other choice but to wait and collect paychecks. Yeah, paychecks. I have my job. I do my paychecks. I get my paycheck from work. And next time, I will do better, and I will try my best to help everyone do better. Dan, I'm sorry, my friend. Luna crushed a lot of people, and I know a lot of folks were overexposed to it. And next time, I'll double down on my efforts to not let anyone be overexposed to anything. The proper risk management. We will do better. We will do better, and I will help you guys do better. 40 people in the stream, 20 likes. We can do better. I thank everyone for joining. Wednesday, May 11th at 12:13 p.m. You know the deal. After party on Discord for the most rational community in the entire crypto space, where I think I've saved at least one soul today. And that brings me great joy in a very somber day. NoahSeidman.com. If anyone needs any one-on-one, I'm more than happy to talk and help the best I can. I will see you next time on a Friday. Stay safe out there. Stay rational. Peace.